Hi there, Mike Brady with Generosity Wealth Management, a comprehensive full-service financial services firm headquartered right here in Boulder, Colorado. So I want to talk a little bit about non-market stuff first, but it is relevant and I think you'll find it interesting. If with all the news about handgun violence in Chicago or mass shootings, if you were to ask most people, are we in a more violent America today than we were 25 or 30 years ago? I'm going to make a statement that most people would say yes, but the reality is that's just not true. I'm going to put a chart up there, and you're going to see that one of the big successes that we've had over the last 20 or 30 years is our decrease in violent crime. And of course, we would want it down to zero. Don't get me wrong, but that is one of the trends that has been kind of missed when you're watching news on a daily basis. What about property crime? Are you more susceptible to property crime? Actually, no. I'm going to put a chart up there on the screen. You're going to see that same kind of a trend. We actually are living in a more less violent America than we were 25 years ago than we are today, even though you might not feel it. It's property crime, the same type of thing. You're actually safer on your valuables, etc., than you were 25 or 30 years ago, even though you might not feel it. And I would say when it happens to you, it certainly becomes personal, and it certainly doesn't feel like when I throw a chart up there, you're like, wait a second, but I was impacted dramatically by it on a personal basis. The reason why I bring this up is when we look at the news, when we look at the markets, we might get all worked up. We might have the same perception that everything is going down the tube when in fact, and particularly when it might happen to us, we're like, oh my gosh, I used to have X amount, now I have a little bit less from whatever point that you particularly pick. And many times I would say that you pick a point that's pretty short. You have long-term goals, yet you pick a point, a high point, that's short-term, which in my mind makes no sense. Remember 2017? Just a year ago. Market went up pretty much, the unmanaged stock market indexes went up almost every week and pretty much every single month. And if you were invested in that, most people saw a portfolio that went up that way as well. That was if you look back at my videos 10, 11 months ago, I would say that's really unique. That's the exception, not the norm. So you might say, wow, the market has gone down spectacularly in the last couple of weeks. It's been very volatile this year. My answer would be yes, it has. Okay, yes, that's true. And if you need the money next month, that might be a problem. Of course, right now, as I'm recording this on a Monday morning, we're right back, at least from the Dow, the unmanaged stock market index, is back to where it was maybe 12 months ago. Definitely up from where it was 2 years ago. Definitely up from where it was 5 and 10 years ago. The future could be different. I think that's what people are always worried about. They're like, wait a second, is this a new trend? It's different this time. I don't know how many times in the last 27 years I've heard that it's different this time, and every reason for why it's different seems to be different. Okay, that's the only thing that changes, and then it's not. Okay, so what I would say is when the market goes up, and just an unmanaged stock market index, just for illustrative purposes, 100 points over 4 days or over 2 weeks, let's say, and then gives up 300 or 400 in 1 day, only one of them gets the news. Okay? So far this year, we are negative 2018. And I don't know where the year is going to end. That's actually kind of the big mystery for this year. What's going to happen between today and the end of the year? But the end of the year is just 1 point. I mean, that's the one interesting point, is that if decisions are made based on an arbitrary date, on a long-term vision that you have for yourself, that makes absolutely no sense to me. Okay? 3 out of 4 years historically have been positive, which means 1 out of 4 have been negative. And being a few percent negative causes someone to change a long-term strategy, you're going to be worse off for it. That would be my opinion going forward. You don't know the future, and I don't know the future. The only thing that really changes when the market goes real volatile or goes down is that everybody seems to know on the news exactly what's going to happen. All of a sudden, the confidence level that everything is horrible and crappy just went up by 2 or maybe 3. Okay, and of course, the people coming out saying, I knew it all along, comes out as well, which of course is ridiculous. Okay, that's that's the reason why I personally don't watch CNBC or some of the other news programs, because when have you ever turned on the news, the local news, and said everything's okay, everything's great, wow, things are going just fine? It just doesn't work that way. In order to be successful, you have to understand that long-term, the market has gone up. Long-term, diversified portfolios have gone up, even though the future could be different. If you're not willing to take some risk in a down year, and this year, if it's going to be down a few percent, that's part of the game. We've talked about this. If you go back every year, I've been doing videos for 10 years now, almost 200 of them. It's always the 3 steps forward, 2 steps back. And if you focus on the 2 steps back, then you're never going to have the 3 steps forward. Okay, that's just the way investing works. Am I rattled by all of this? No. Should a strategy change, the market? I'm going to change I'm going to move this over just a little bit. I see the sun's hitting my eyes. When the market first hit 24,000 and it went up to 26, and now it's back down at 24,000, the unmanaged stock market index, do you change your strategy? No. Did you change it when it first hit 24? No. What I have seen over the last, couple of years, my goodness, why am I saying that? Over the last 27 years, when the market hit 20,000, people were like, well, it's obviously at the top. And then it went up to 22. People were like, well, it's obviously pretty toppy, pretty much at a high. That's obvious. That was a year and a half ago. Okay. Then it went up to 23, 24, 25, 26, 26 and a half. And now it's back at 20, 24. Now it's in the 23 for the unmanaged stock market indexes. Okay. If you bought at 26, great. That's not so great. But the reason why you bought it is you assume, and his history has shown, then in the long term, it's higher. Long term being 3, 4, 5, 6 years. However, if you bought it at 20, 15, 16, you know what? That's why you have long term. And long term, where was it? It was just a few years ago. We're not talking decades ago. So you've got to keep the big picture in mind, particularly when you're looking. I'm going to throw up on the chart there what it looks like. Okay, that's what it's looked like over a 1, a 2, a 5, and a 10-year time horizon. If you only focus on the short term like a mosaic real close to your face, you're never going to see the big picture. And it does become personal. It does become personal into your portfolio. That's why you have to perhaps be even more cool and listen to maybe someone like me who is saying, don't listen to the guy on the news because he's going to try to get you excitable. Is it exciting to go to the barbecue and have everyone say, yeah, everything's great? No. People are either fearful or they're greedy. When the market's going up, all they want to do is talk about their winners. When it's going down, it's, oh my God, everything is horrible. Who can I blame for this horribleness? Okay? Don't fall into that trap. That's all I have to say. I'm always here if you need to talk with me. 303-747-6455. Mike Brady, Generosity Wealth Management. Bye-bye.